Hello and good morning, listeners. Welcome back to Almus Market Mornings with Jairam Krishnamurthy, your morning brew of global financial updates. Now, folks, just yesterday we were talking about the correction in gold on the trade talks positive front, and gold dives back to its levels during the day with a huge recovery. Currently trading above the USD $3,220 per troy ounce levels. On the domestic front, India's trade deficit widens compared to the previous month, and globally, the US factory output numbers decline. Traders are also dialing back their rate cut expectations. So, Jacob, what's in store for us with respect to the financial markets and such developments?
Good morning, Shikhar. Yes, I think you mentioned gold. I think that's really a telling movement that we have had. If you combine the up and down movement, rather the down and then up movement, it was almost $200 in a single day. And it also establishes the fact that whatever you may say about gold being overbought and correcting, I think buying interest is very strong on dips, and that is likely to continue. And with the dollar being weak, as borne out by yesterday's data also, I think gold's downside should be quite limited. But the consolidation can continue for some more time before we attempt to break into new highs. Yes, back to yesterday's trading. Rupee again on the weaker side uh, because outflows were dominating and inflows have been quite modest and not enough to meet the demand. So we even traded above 85.72, but since then been drifting down. There are also possibilities of some inflows hitting in the coming days. During the day, we also had the trade numbers, which was published for India for the month of April. And both the merchandise trade deficit as well as the overall deficit increased last month. And that was mainly due to fall in merchandise exports. I mean, at 8.65 billion overall deficit, including services and merchandise, it's not really a concern because we are still very much within the average deficit of the last several years. And as we have pointed out several times, India's trade deficit is well covered by the record remittances that we are receiving year after year, and therefore even the vagaries of foreign fund flows are not really affecting the overall balance of payment. Beyond that, of course, the rupee is probably likely to take more cues from the global factors as we head into the weekend because the data has been soft in the US. There are indications that again Fed may have to hasten their rate cuts if the economy slows down further. But as of now, indications are quite neutral, and no indications from Powell in his speech yesterday on the monetary policy, which many people were expecting. So the rupee, I think, will trade between 85 and 86. I think break of either can give you some directional move as well. On to the global markets, a host of data from US yesterday. PPI was much softer than expected. For example, core month on month was minus 0.4% versus 0.3% plus expected. And even the headline was minus 0.5 versus 0.2% expected. And these numbers, this type of contraction in the inflation was last seen only in 2010 post GFC. So it's a lot of food for Fed to consider because eventually the PPI inflation flows into the retail inflation as well. Retail sales also were much less than expected, indicating that the consumption is slowing down. Particularly, the control group sales was in the negative, minus 0.2%, and that goes directly into the calculation of GDP. Industrial production was flat versus 0.2% plus expected. Overall, an underwhelming data set from the US. Definitely, it was not surprising that the yields came off after trying unsuccessfully to push through 5.00 on the 30-year, and only a temporary foray above 4.50 as far as the 10-year is concerned. And the 2-year actually has fallen as much as 12 basis points. Although the Fed watch tool doesn't show any change in the rate cut expectations, one in September and one in December, but I think further weak data can actually spur talk of a rate cut in July as well. On the currencies, dollar has been stuck in a range despite the movement in the yields. Although we are seeing some movement in the Japanese yen, which has come to low 145. This is despite a big contraction that was seen in the Japanese GDP that was published today morning, coming at minus 0.7%, and that was quite a surprise for the market. Yeah, on the yuan side, again, fixing was slightly lower, below 7.20, and the market has slightly reacted, coming below 7.2, but nothing directional there again. But just to repeat what we have been saying, the underlying trend for the dollar is still down, and there is no indication that any big up move in the dollar can be expected, because this is not because of any trade issue or anything. It is all because of the positioning in the market, which is overweighted in the US assets. And as and when you see a rally in the assets, people not only will be reducing those, but also will be reducing their exposure to the US dollar as well. So that keeps the the upside for the dollar limited. And I think we should eventually look forward to much more falls in the dollar as we head into the weekend. Thank God it's Friday, and have a good weekend. Thank you.
Okay, JK, and yes, folks, it's Friday, so we do definitely say TGIF, for thank God it's Friday. But just concluding, yes, we've seen the yuan fixing lower, but more than that, it was the underwhelming set of updates from the US economy. For example, the softer PPI or the even lesser retail sales, which kind of suggests that the consumption is also declining, are all supporting the overall underlying expectation of dollar weakness in the medium term. Along with that will be the change in the kind of positioning the market participants are having for the US dollar with its investments as well. Now, on the domestic front, we have seen the rupee weaken yesterday, primarily in the backdrop of more of dominance by the outflows compared to the inflows. And the trade deficit, as JK mentioned, we are closer to the average levels, and such deficits are easily covered by the services and the remittances. So it's not that big a concern as of now. On the gold front, yes, there's been a good, huge dial back, and continue to maintain that these downward action in gold are more or primarily the correction in the larger trend, and there's no change for trend for the gold. And we can continue to see some bit of buying or demand for gold on the downward side movements, suggesting that the downside action will continue to remain limited. That's it for today, folks. We shall come back again tomorrow with another round of updates. Thank you so, not tomorrow, actually, on Monday. Thank you so much for joining in.